Hello and welcome to Dollars and Cents, the Australia Institute podcast where we're talking about just what the hell is going on in the economy. I'm Elinor Johnston-Leake, the senior content producer here at the Australia Institute, and as always, I'm talking to our chief economist, Greg Jericho. Hello, Greg.
Hi, Elinor.
How are we doing today?
I'm not good. I've got a bit of a flu, so I've decided the best thing to do is to get into a very small, compact room with you and spread my germs. So we're going to get through this very quickly, and then I'm going to go home to bed.
Yeah, sounds good. Well, we appreciate your sacrifice in coming in.
And it is also a special podcast.
It is a special podcast, so it couldn't keep you away if we tried.
We don't have our normal producer, Angus.
Oh, I thought you were talking about the topic. Oh, yeah, no.
And so we're going to be quick and
we're going to be quick because
and
I'm going to be editing it today, and I'm nowhere near as fast as Angus at editing the podcast.
But Angus finally having a holiday, so
yes,
he'll
well
be
deserved.
Back, and he can torment me next week.
Yeah. Well, we'll look forward to that then. But also, this week is special because we have a pretty important topic to talk about. We've got some new inflation figures out this week, Greg.
Inflation has soared to its highest level in almost 3 years as the fuel crisis bites. But we are being warned that it will climb higher as the economic aftershocks from the war in the Middle East continue.
This is the first read on inflation that takes into account the Middle East conflict and the spike in oil prices that we've seen.
This hefty price that Australians are paying for the war in the Middle East will continue to reverberate around our economy, whether it's its impact on prices or on economic growth.
The Aussie dollar was already falling at 11.30 when the March inflation data hit the screen, and then the slide continued when the headline inflation rate, that is including fuel, was a bit less than economists had penciled in. Apart from diesel and petrol, inflation is pretty much under control, really.
The question is, does the RBA, when they're making their rates decision, take a really long-term outlook, say this is coming globally, this isn't something that raising the interest rates on the mortgages of anyone watching at home is going to change. Fuel is one of those things that many Australians have to spend money on. So how does jacking up their mortgage rates and their interest rates stop them spending money? It just takes money out of their pocket.
These were ones we were all kind of waiting for because, as listeners will remember, the last ones were February, which we kind of missed all of the real impact.
I think when we talked about it, we said, these figures don't actually include the Iran war that just started. Yeah, I mean, those figures, all figures are looking in the past, but they were really looking in the past. It was of a world that was no longer didn't exist anymore.
Yeah. It was a world where Iran and America were at peace, and well, sort of.
Anyway,
they weren't bombing each other anyway.
Yeah.
So we knew that these figures, when they came out, were going to kind of be nasty.
Yep.
And were.
Are they? Yeah. What are the figures?
So we saw a jump in annual inflation from 3.7% to 4.6%, which is a massive 1 month jump. Yep. And if you just look at the monthly figures in the month of March, prices on average rose 1.1%, which, if that was to happen every month, we'd be having inflation over 12%, which, just gives you a sense of how abnormal and huge that jump was. Good news is it actually was a little bit less than some economists were expecting. They were thinking it might have got close to 5.
Yeah.
But also the good news is it really was just due to one thing.
Yeah. Well, I'm assuming everyone will be thinking fuel prices. Can we dig deeper into the numbers and know how much of it is actually driven by the fuel price? Yeah, fuel prices alone in March rose 33%, which is I'm a little bit disappointed because last month when I was looking at the figures, I tried to anticipate the increase and I went for 30%. So I just undershot it. Yeah.
But all up, what that means is because of the increase in petrol price was so huge that it accounted for almost about 90% of all of the increase in overall prices in March was due to petrol prices. And I was saying before that inflation in March went up 1.1%. If you take out petrol prices, they only would have gone up 0.1%.
Yeah. So, and petrol prices have dropped a little bit recently because of the is it fuel excise?
Yeah, well, actually quite a lot.
Yeah.
They're pretty much now because of because of two things, the fuel excise and also world oil prices have sort of not really settled, although they've just started going up a little bit more because Trump's a madman.
Yep.
But yeah, the fuel excise halving really dropped. And so overall, as we speak today, unleaded petrol is basically at around where it was before the war with Iran started. In fact, even a little bit lower. What complicates it, of course, is diesel. If you have a diesel car or truck, you would know diesel prices have not come down. And so that also goes into the overall figure as well.
Yeah. But that that fuel excise changes, though, but won't be included in these figures.
No, they'll be in next month's figures. So again, this is why, it's always a bit silly to just look at 1 month's inflation and go, oh, God, inflation's out of control. It's like, well, what caused it? It was that 30% rise in petrol prices. We know petrol prices have come down about 30% in April. So it's going to cancel out itself. And so does that mean inflation's all solved because of April? No, but it doesn't mean that inflation was terrible because of what happened in March. So a lot of noise. But the good news was that really when you sort of strip everything back and get rid of all of the sort of one-off things, inflation was pretty nice and steady in March. When we look at what the Reserve Bank calls the underlying inflation, the core inflation.
Yeah. Yeah. Well, speaking of the Reserve Bank, they're meeting, next week? And
next week.
Yeah, everyone's kind of saying that the RBA is going to raise interest rates and using these inflation figures as a reason to do so.
Yeah, the odds, the market's predicting basically about a 75% chance of a rate rise, which is in sort of interest rate terms pretty likely. Means it's pretty likely. The annoying thing for us, certainly in what we've been arguing, is that really the inflation figures didn't actually change anything. It was a case of everyone's just locked into this sense that, the Reserve Bank wants to look tough on inflation, so that's why it's going to raise interest rates. And these figures kind of just confirm that, they'll have to do something. But as listeners will know, we've been saying, hey, RBA, maybe hold off, because what drove those price rises? Petrol. What's something that you kind of can't avoid having to pay? Petrol.
Yeah. What's something that the price won't change if you increase interest rates?
Yeah. Petrol. So look, there have been some reports today suggesting, maybe the Reserve Bank might wait and see, because also what we know is, okay, next week the Reserve Bank meets. The week after is budget.
True.
So
God,
we've not only got the uncertainty of what the hell is happening with the Strait of Hormuz and all of that, we've also got the uncertainty of not knowing what's in the budget. So why not wait 6 weeks and see?
Yeah.
In 6 weeks, in the middle of June, they will have more information about what's happening with oil. They'll know what's all in the budget. They will have got the wages data from March. So much more data, so much more of an understanding of what's going on.
Yeah. Well, going back to your point you'll bring up earlier about the underlying inflation.
Yeah, there's a measure called what we call the trim mean, and they call it trimmed because basically it trims the top 15% and the bottom 15%. So the 15% biggest rises, the 15% biggest falls, to kind of get that middle 70%, where they're kind of saying, well, if that's going up and down, that basically means you can't say it's just due to one-off things. Yeah. It's kind of, it's sort of reflective of the middle ground in a sense. And that was flat. That was flat at 3.3%. It was 3.3% in February. It was 3.3% in March. So that really gives us a sense that, okay, yes, the CPI, the Consumer Price Index, that shot up to 4.6, but obviously it was just due to petrol. Everything else kind of steady. And that, again, is what the Reserve Bank kind of looks at, because not that they're targeting that figure, but it gives them a sense of, is inflation kind of out of control? Is inflation really rising?
Yeah.
and it's not. Okay, they'd like it to be below 3%, but again, it all seems to be a bit steady. So, what are you really worried about? Do we need a rate rise because it's at 3.3% and you'd like it below 3? That seems to be a bit harsh, especially when we've already had 2 rate rises.
Yep.
And the impact of those hasn't flowed through really into the economy yet.
And also when, I guess, people are already struggling due to these high fuel prices, which are out of the RBA's control.
Yeah, and even though the prices have come down, that doesn't take away the impact of them going up. It's not like in March people were like, oh, I'll just stop driving the car and wait for the prices to come down in April. It's not like anyone for a start knew that was going to happen. Petrol's not a thing like, oh, I'll wait for the sales, really. I mean, you might have Cheap Ass Tuesday or things like that, but, in Canberra we don't. But prices were up everywhere. That hurt households almost to the extent of another rate rise in March. And yes, it's come down, but that's just got us back to where we were in February. It's not like we're suddenly looking at petrol prices and going, wow, it's so cheap, I can afford to go spend a JB Hi-Fi or wherever. It's just we're kind of back to where we were.
Yeah, and you brought up a point in your column in The Guardian this week. We're still going to see flow-on effects from this fuel crisis regarding like fertilizer and food costs. And, that's just another reason why the RBA should wait to see what happens.
Yeah, because and this was something we also saw with the Russian invasion of Ukraine, a similar impact where it wasn't just oil and gas prices, it was fertilizer prices and things not because of fertilizer, but because of some of the things that go into the making of fertilizer that come through the Strait of Hormuz. That means those prices go up. Well, what is fertilizer used for? For food. So that means food prices will inevitably go up. And also what we're going to see, and we're already starting to see it, is that as we saw with Russia invading Ukraine, companies around the world were like, oh, everyone thinks inflation's going up. Let's take advantage of that. If you're Woolies or Coles or whatever, you can raise prices on milk by whatever. Does anyone really know how much of that is due to increased fuel costs or increased whatever? It's a bit of a black box.
Well, we did some research about the inflation. Well, we here at the Australian Institute, not me personally, did some research about the inflation following the invasion of Ukraine. And what was the percentage or increase there? What was the impact?
Oh, it was, I think from memory, about 69, 70% of it was due to profits.
Yeah.
Of the increased inflation was due to profits. And that's the worry we're going to see here, because often while you always hear these reports of, fertilizer prices are increased, the actual share of that goes into the cost of whatever food is often a bit overstated. It doesn't just because fertilizer goes up 20% doesn't mean the cost of whatever food is using that fertilizer has to go up 20%, because that's not 20% of your entire cost.
Yeah. And
that's the problem. That's where we see it. An interesting thing is I've been sort of tracking the share prices of companies since the war. And obviously Santos and Woodside doing very well. Ampol doing really well. Woolworths doing okay. In fact, doing a lot better than the banks and other places. And I think it's because Woolworths also has a lot of petrol stations as well.
That's true. Yep.
But there is this sense that this increases in prices. We saw what happened during the Russian invasion of Ukraine. It didn't hurt their share price. It didn't hurt their profits. And the concern for us is that it's going to do that again. So hopefully the ACCC, with its new pricing powers that it didn't have back then, is able to keep a bit more of an eye on it. But we certainly will be, because you can't trust them.
Another thing that you mentioned in your column this week, you talked about tradable versus non-tradable items, and that's something that the RBA looks at when looking at whether to change interest rates. Can you just tell us basically what that is?
Yeah, there's a lot of things that we buy here in Australia that the price isn't determined by Australians in a sense. It's determined by the world market, and a classic is petrol.
Yeah.
Petrol prices didn't go up because we suddenly wanted a lot more petrol. It was because of what's happening on the world market. And there's a lot of things that you wouldn't even think of, but things like lamb, beef, a lot of foodstuffs, The actual price is determined by the world because we're an exporting nation, and companies, a bit like we see with gas, if they can get a good price overseas, then that's where they'll go.
So I'm assuming these are the tradable items.
Yeah, so these are the tradable items, and that shot up in March because the big tradable item is petrol. But non-tradable items are generally a lot of services that are done here, like the hairdressers. There's no world market.
You can't really export that, yeah.
No, and so a lot of services and a lot of things like insurance, like education costs, they're all determined basically just within the confines of Australia. And so you could, in a sense, say, well, the Reserve Bank doesn't have much control over the tradable prices.
Yeah.
They are caring a bit more about what's happening with the non-tradable things. What's happening with the prices in Australia? Are they seeming to be out of control? And again, in March, they went down, or the growth of them went down. So
for non-tradable items.
Yeah, for non-tradable items. So it's a sense of RBA can look at the big figure and go, oh, wow, inflation's at 4.6%. We need to stomp on that. But if they look at the core inflation, if they look at what's actually driving those prices and realize these are things outside of our control, why would we then raise interest rates?
Yeah. Well, I would hope that the good folk at the RBA would, dig into the details a little bit more, dig into the data.
Yeah, dig into the data, and then they decide, but the risks are on the upside, and so we decide we should increase them.
You don't have much hope then.
Look, I do have a little bit. I don't know why, but I do. Only because with the budget being the week after, I think that gives them a really good excuse to hold off.
Yeah.
Even though the market, as I say, at the moment expects them not to. And also, I think, as we said last month, when we were looking at the inflation figures, we point out actually one of the reasons why inflation even sort of went up a little bit last month was because of all what was happening with the electricity rebates. And there was a lot of noise there because a year ago we had rebates, now we don't, and it made it look higher than it is. This one, if we stripped out the petrol prices, inflation would have actually gone down. Annual inflation would have fallen.
Yeah.
To about 3.5%. So it's kind of like, it seems like it's doing what you want it to do.
Yeah.
Why, if they raise rates next week, that'll be 3 meetings in a row where they've raised rates. Now, inflation is not out of control. Why are you acting like it is? Do you really want a recession? Is that what you're aiming for? And you'd hope not.
Well, I guess we'll just have to see what happens next week, and I'm sure we'll talk about it after the meeting.
Yes.
See what happens.
Next week is going to be a big one because it'll not only be post-interest rates, it'll be pre-budget. There will be so much to talk about. We've had lots of news this week about, is there going to be a gas tax, is there not, capital gains tax, and all things else. Fortunately, we really don't have time this week to go in, and next week with Angus back, we will have a bit more time to because Elinor actually has another job besides podcast editing.
Yeah, but happy to jump in when needed. Yeah.
And so we will be back, though, with that next week with all of that great discussion, hopefully about the Reserve Bank being sensible and hopefully some good news about what might be in the budget. But we'll have to wait till then. But this episode, Dollars and Cents, was recorded on Thursday, the 30th of April. That means tomorrow's May.
Oh my gosh.
And some things may have changed. You can read my column, which delves into what actually was driving inflation in March on the Guardian Australian website and the Grogonomics page. But for all other things, including some analysis of inflation, what's going to be in the budget, what's not going to be in the budget, and some other great columns, head over to thepoint.com.au and get some fantastic reading. And I think we have our podcasts all on there as well somewhere.
Yes,
we do. So you can find this podcast, Follow the Money, After America, all there. Great site. Check it out. As always, our music is from Blue Dot Sessions. Everyone, have a great week. Don't catch a cold like I have. Good luck, Elinor. And we'll see you all next week.
See ya.